Hey guys, welcome to our first class that we are teaching on YouTube. This class usually lasts about an hour. I expect it'll last about that long, especially because we don't have any questions. I don't anticipate it going longer. So this is Budgeting Made Simple. And let me tell you, this is basically beginner's level of how to create a budget using Excel. Everything that we do in Excel can be uploaded to QuickBooks or Sage. I highly recommend that you create your budget in Excel and then upload it because it's easier to maneuver things around in Excel. Plus, this is going to give you more control. And we're going to just kind of jump right in. So I hope you guys enjoy. Please leave comments and let me know what you think. All right, so when we talk about a budget, and when I think about a budget, we break it down into four basic parts. There could be five. So if you offer services and you sell items, then there could be five. If you only sell items or offer services, there will be four. But first, we're going to talk about cost of goods sold or services provided. Then we're going to talk about projecting revenue and then expenses. And I break expenses down into two different categories to make it easier. So basically, when you set up your Excel workbook, you'll have a minimum of four spreadsheets in that workbook that you're going to work from. And then we're going to put it all together for a very easy to read, compact version of it. And this is what you would share in business plans, business meetings, when you're meeting with investors. You just want the level of detail that we're going to do for yourself to help you with projections and everything moving forward. All right, so let's first talk about the cost of goods sold. And let me just kind of give a disclaimer. Everything in here are just examples that I have created to make it easy to show you how to do this process. Any recipes or anything in here are completely fabricated, so please don't follow them. All right, so when we talk about the cost of goods sold, we need to think about how many we want to make or how many comes in a batch. Very rarely is it that you just make one, right? You might make like all pieces for something and then go back and make all the next pieces and put it together, but you're gonna wanna determine how many that you wanna make. Then, and this is the very important part, especially with the recession and the changes in prices, we need to list each item that it takes to make this particular item, and we need to list how much of each item. Then we're going to list the price so we can really calculate it. And this is going to come up. I'll show you an example why we do that. And then we're going to determine what it costs to make an entire batch and then what it costs to make just one unit. Okay, so if we are talking about anything that we're cooking, so when you cook, you're going to make a batch, and very rarely are you going to want to make just one batch. It's going to prove more economical for your time to make 3 or 4 batches at a time, or however that you do this. But what you're going to do is you're going to list each item, how many is needed, the cost for the item, and the total cost. And the reason that I want you to do this is as we're entering into this recession, whatever you want to call it, even if we weren't entering into a recession, if you know what each item is costing you, what each of the raw materials is costing you, you're going to be able to negotiate with your vendor. You're going to be able to vendor shop, and you're also going to know when sales pop up, if those are going to be good decisions for you to go ahead and purchase those items. So like, for example, sugar and peanut butter have a pretty long shelf life. You're going to know how much you're going to need per batch and how much you anticipate making throughout the year. So if you get a discount for buying in bulk, this will let you know that. This is also going to let you know if it's time to change vendors. And let me just stress here, it's really important that you have a good relationship with your vendors and you want to know if there's sales or any changes coming up, but you also want to be able to negotiate prices. So if you've been a longtime client for this vendor, which you know the vendors can't afford to lose clients or anything, you want to use that wiggle room to get the best price that you possibly can. So once you list everything, you're going to come up with the cost. And you can see that it costs about $5.75 to make a dozen cookies. And so your cost per cookie is 48 cents. Now you can work labor in here to get a true accurate cost of the labor and the item. I prefer to do labor separately and to just do the cost of the item and then just do payroll. I find it simpler to do it that way, but this is going to give you an idea of what it costs. And so it costs you 50 cents for a cookie. If you sell a cookie for 75 cents, you're making about 25 cents in profit. And you do want to make sure that your price does include a profit. So once you know what the cookie costs, you can also set your fair market price, which this is how I always explain it. So if we do like a window, a range, right? You don't want to be at the price of Walmart because people don't value things that don't cost money, right? If things are too cheap, they're going to wonder why they're so cheap. You want to be somewhere in the range of middle to middle high, but you don't want to be the highest. So the analogy that I always give is you want to be higher than Walmart. You want to be a little bit higher than Target, but you don't want to be all the way at like a crust price, maybe, or um, a Kate Spade price. You want to be just a little bit above that target price, which tends to be a little bit above fair market value. You want to show that you have pride and communicate the value in the item that you're selling by the price that you set. So you don't want to be the highest, you don't want to be the lowest, you don't want to be in the middle, you want to be just a little bit above that middle. That's really going to communicate your value that you put into this and your pride. So now let's talk about the cost of services provided. So I have a couple friends that are photographers, and because I know how to set up photography equipment, a lot of times I help out on photo shoots, just setting things up, right? So when you provide a service, there's going to be certain items that you have to provide that service. So if you're a photographer, you're going to probably have a Photoshop membership. You're going to have a Lightroom membership. You might have a printing membership. You're also going to need to think of saving money for replacing the equipment, right? So let's say, and again, I'm making this up, let's say the average digital camera that a photographer uses has a 3-year lifespan. Well, you want to figure out over the 3 years, if that's, so let's say 3 years is 36 months, that camera costs $360. So it's going to be $10 a month that you need to save in order to calculate replacing that. Again, I'm using numbers that are smaller for easy math. I know these prices aren't accurate, but that gives you an idea. So you need to consider the wear and tear on your equipment, replacing that equipment, and the total number of hours that it takes you to complete that service. So like, for example, when I meet with a client to write a grant, it's about an hour of research on that grant, making questions and understanding what documents I'm going to need from the client. It's about another 2-hour meeting with that client, getting all the information, learning about them, learning about their program, getting all the information that I need. Then it's probably another hour in follow-up emails. So we're already at 4 hours. And then there's at least an hour creating all the documents that are going to need to be created and the files. So we're at 5. And then on average, it's another 10 hours writing that grant. So we're looking at about 15 hours for one grant. And so that needs to be reflected in here to know how many hours it takes you to complete that service. This is going to allow you to really get that idea of what your hourly price should be. Now, you need to look at what hourly prices are for your competition in the local area, your economic development office, your technology center in the business development office, the SBDC, the SBA, your Chamber of Commerce. They're going to be able to help you know what the average price per hour is for these services. But you want to know what it costs you to provide that service. And you also need to remember that it's going to affect by the number of hours that it takes. So like, for example, on a photo shoot, there's the research, the photo shoot, and then all the editing of the photos. So for any one service, there's probably about 15 to 20 hours of work that go into that service. And that's something that you need to know. So that way you know what it costs you per hour, what the average hourly rate is, and you can make sure that you're just a little bit above that middle price, which is where we want to be. So we're going to just say that it's going to cost about $310 per month for you to be a photographer. And on average, you can do 10 photo shoots in a month, and each photo shoot takes about 2 hours. So that's a total of 20 hours for the month. So it's going to cost you about $15.50 to provide that service. This is not what you charge. This is what this costs you. And you need to understand what that is versus what the fair market price is, because your price per hour or what you charge is going to need to cover all of your overhead. But it's really good that you understand what it costs you to provide this service, because as you go over the years and you review your documentation and your different budgets, there's going to be services that you're going to drop, services that you're going to add, but you need to understand what it costs to offer that. So that way you can adjust your schedule accordingly and make sure that you only offer the things that cost you a fair amount of time and money, but produce you the most amount of revenue. So now when we talk about anticipated costs of goods sold and services, this is when, without being political or anything, you need to keep kind of an eye on what's going on in the political climate, because, elections can affect things. We saw in the pandemic how there could be a freeze on items, or it could be hard to get certain items. So you need to kind of keep an eye on what's going on. If you use raw materials that are produced through agriculture, you're going to want to keep a little bit of an eye on what's going on weather-wise. Are there droughts? Are there anything of that nature going on? Is it going to be harder for you to get those items? Are those prices anticipated to go up? And so that's why it's important for you to know what it costs versus what you sell it for, because you're going to need to have wiggle room in there, not just to cover your overhead, but also to cover any fluctuation in prices. Because, you can't change your prices on a daily or weekly basis. You could probably change them maybe once every 6 months, but no more than once a year, right? So you really need to make sure that you have that room that as your costs go up, you're still going to be okay and you can still pay all your bills. Now, let me say with the budget, what I always teach my clients to do is to budget very conservatively and very low. What basically your budget is going to do is your budget is as guaranteed as you possibly can be of what you're going to make. You want to be very low, very conservative, very lean. But your financial goals are completely separate from your budget. Okay. So your budget is lean. It's very conservative. It is something that you can almost guarantee that you're going to make. Then you set your goals. So let's say you have a sales team and on your budget, you only need to sell 5 items a week and you're going to make your budget. You don't tell your sales team that. You tell your sales team that they need to sell 10 items per week, because you want to stretch them, you want to grow, and you want to see that extra profit coming in. But remember, we don't want to set our budget so high there's a chance that we're not going to make it. We want to be as guaranteed as secure as possible that we're going to make that budget. All right, so when you build your cost of goods or cost of services, this is what it's going to look like. And when you're setting your prices, I always like to, when I do my projections, I do price increase and expense increase by 3%. No, sorry, revenue and price increase by 3%, expenses increase by 5%. This is what I've done for the last 15 years, and it's proven to be very effective and very accurate in predicting what you can expect to come in. Now, if you'll see on my screen, I have the cost per item, what it costs in total for that item, the average number that you sell, and then we're going to increase by 3%. And then I always have numbers sold the story, because here's the deal. When you're building these workbooks, you want to build them where you can open a workbook from 10 years ago and understand exactly why you did what you did. So you always want to have notes. It's so much easier to write everything down than it is to try to remember. So if you have a signed contract, if you know that you have pre-sold certain items for the coming year, go ahead and increase that number, but write down why you increased that number. You're going to put your total cost. And then I always like to see what the revenue is and the profit margin. And remember, that profit is what's going to cover your overhead. And it's also very important that with any extra profit that you have left over, you create a 90-day operating line item and a rainy day line item. So what that means is your 90-day operations cost is you're going to have enough money saved up to run your business at 100% full steam for 90 days without making any money. And then your rainy day line item is going to be the deductible for your insurance, so that if you have to file a claim or anything, you have that deductible saved. Now, what those two line items are going to do is they're going to strengthen your business. They're going to increase your cash flow and your liquidity, meaning that if you need to go ahead and pay bills before people pay your invoices, you're going to have that fluctuation and that room to do so. It's also going to mean that you're prepared for any disasters or hard times, and it's going to give you something to borrow against. So in my business, I've had to borrow against my operating costs before. And what I do is I treat it as a loan, but to myself, and I make sure that I create a payment plan and pay that money back. So it's important that you have that liquidity and that fluctuation in your budget, that it's not just right on the line. You have operating costs and you have that rainy day item so that you can cover anything that you need to cover. Think of it almost as a rolling line of credit, but through yourself. All right. So now we're going to do calculating expenses. Now, your expenses are your overhead, and these are things that it costs to run your business, not to make items and not to provide services. So these are going to be things like rent, utilities, your insurance, your social media, your website. That's what your expenses and your overhead are going to be. Now, I also break those apart from payroll. Now, let me put this in very clearly, and this is what I tell all of my clients and every time I teach this class. If you don't budget for it, you don't get it. So if you have an anticipated expense, go ahead and budget for it. If you anticipate that you're going to have overtime in the coming year, budget for it. If you anticipate giving pay raises, budget for it. If If you anticipate that you're going to have new employees, budget for it. Because if you don't budget for any of that, you don't get to add that. Because when you just randomly add things into your budget, that's when things kind of get haywire and when you don't really know what's going on. So these are questions that you need to consider every year as you're doing your budget. And let's say that you're running on a calendar year. In September is when you're going to want to start working on your budget for the next year so that it's done by October, so that you have November and December to focus on the holidays and the rush. And come January, you have that new budget ready to implement. So let's talk about payroll. So this is how I always list everything. Now, I am located in Oklahoma, and so we have the Oklahoma Employment Security Commission, which is basically your unemployment tax. I always budget at the highest percentage because, again, this gives you just that little bit of wiggle room, and that makes sure that if you have a mistake anywhere or if you do get hit at the highest percentage, you have that money. What I do is I list each employee out by name. Let's say I was going to hire 2 new employees, then underneath the last employee name, you can list employee 1 and employee 2. If you're going to give pay raises, what I do is I list everybody twice and I calculate the first line for the number of months that they're going to make their current salary. The next line is for the number of months that they're going to make that pay raise. It makes it easier to do the math that way. And what we want is accuracy here. I always put if they're salary or hourly. Now, I cannot stress to you enough, you really need to go to the Department of Labor's website to review how they classify exempt versus unexempt, because if they fall into unexempt salary, they could still be, you could still have to pay them overtime. That's basically what I'm saying. So you want to make sure that you get everybody classified correctly and you budget everybody correctly. Now, I always tell people if you have hourly employees, schedule them for 35 to 38 hours, don't schedule them for 40. You're going to go ahead and you're going to pay them for 40 or budget for 40 hours, but you're going to schedule for 35 to 38. And the reason being is that gives you that little bit of wiggle room to ensure that there's not overtime for clocking in early, clocking out late, missing a lunch hour, however it's going to work. But you want to make sure that you work very smart. You want to know what the hourly wage is, and you want to know what your weekly payroll is and your annual payroll. Then remember, we have to pay our employer taxes, our unemployment. If you offer benefits, you're going to calculate it in here. So your payroll is not actually 193,000, it's really 210,000, right? Now here's the thing, as the owner, if you don't calculate your payroll in here, you don't get paid. So make sure you calculate your payroll. Now let's say you don't do payroll. Let's say that you're an LLC, a sole proprietor, and you just do an owner draw. You still want to budget for that owner draw, and that's 100% legal, so that you taking every month versus just kind of taking whatever. You've got to have a plan, because every business has seasons, and you're going to have busy seasons and not busy seasons. And you need to know when those not busy seasons are so that you can save money from the busy seasons to cover those. So like in landscaping in Oklahoma, you're going to be busy from probably about April to November. But then December through probably March, it's going to be pretty slow. So you're going to want to make sure that you save enough money from that busy season to cover the slow time. And that's how you're going to make sure that you have a healthy business that can really withstand all the changes. All right. So I always calculate payroll separately, and I do it by the person. And I always make sure that I calculate it weekly or biweekly, however you run payroll. So that way you can have a quick total and know if you're on the money or not on the money, because payroll is one of the easiest places that your budget and your expenses can get out of hand. And so if you just know real quick when you process payroll what that total should be, you're going to know that you're on the right path with that. So what I do is under benefits and payroll, those are already listed out on that other worksheet, but occupancy, transportation, marketing, I list each of those items out individually before I combine them into this, because you want to see how prices fluctuate. So like one of the easiest things to do is watch your water bill, right? If your water bill all of a sudden goes up, even just by $5, could mean that you have a toilet that's running, and by replacing the innards of that toilet, you can cut your water bill. But watching your utilities closely is going to let you know if there's a problem in your building or something you need to watch. You also want to make sure that on marketing, you budget appropriately. I have so many people ask me what they should budget here, and it's really hard to say. There's no perfect formula, but here's the deal. You want to make sure that every penny you spend in marketing has a return on investment for you. And you want to do some conversations and ask, what is it that you should be doing and where should you be spending that money? If somebody calls you for a sponsorship, you want to make sure that you ask what the return on investment is for that sponsorship. How many people are going to see it? Do they anticipate you getting any business, or is it more you're just supporting the community? That's going to allow you to really set what that number should be. And for the most part, other than payroll and benefits, the rest of your expenses should be very similar from year to year. If they go up, there should be a good reason why, like you expanded your store, you got a new website, but there should be a really good reason why those expenses go up. One of the easiest things to control too is like office supplies. People don't value something that they don't pay for, so they'll just take all the paper. But if you kind of stress that you're going to budget that paper, that you're not just going to, hey, we can't just take all we want, your employees are going to be more respectful of that. So that allows you to control your expenses. So now we're going to talk about setting the price of your item. And you want to make sure that whatever price you sell your items for, that at the end of the day, when you put this budget together, you still have a 10 to 15% profit. That 10 to 15% profit is what you turn around and reinvest in your business. That's what creates your 90-day operating costs. That's what covers your rainy day costs, right? That's when you know that there's a really cool seminar coming up that you're going to want to go to. You're going to save that profit to pay for you to go to that seminar. We're all going to have to replace our equipment at some point. That gives you money to replace your equipment unless you budget for it all along. But this is when you really want to be very honest with yourself too, and how much can you actually produce? Now, me personally, and what I recommend to my clients is never budget revenue for more than 20 hours of work a week. Now, the reason that I say that is particularly for me is there's probably about 20 to 30 hours of administrative work I do every week on top of what I do for clients. And so I find that if I budget my revenue at 20 hours per week, I get a pretty good idea of what I'm going to be making every week and what I need to make versus killing myself by saying I've got to do this 20 to 30 hours of administrative work and 40 to 60 hours of work for clients. So you've got to find that balance. Now, if you have employees whose sole purpose is like in a bakery to bake goods, maybe budget at 30 hours a week, depending on what you think they're going to be capable of. But you never want to book for that full 40 because there's always things that they're going to be doing that aren't going to produce any revenue. And that's why you never, anticipate for the full 40 hours in a week. You also need to be very honest with yourself and realistic on how much you should sell. So I do 20 hours per week at 48 hours a year, 48 weeks per year. Sorry, 20 hours a week, 48 weeks. The reason that I do that is the last 2 weeks of the year are very slow for me. I like to take the week of Thanksgiving off as well. Now, when I say those 3 weeks, I don't take them off, but that's when I do some planning and prep work for the coming year. And then the other week just covers any family emergencies, any holidays, any other time that I take off during the rest of the year. So I find that if I'm not planning to work the full year, I'm planning to only work 48 weeks, and by only billing for 20 hours in that 48 weeks, I have a very realistic projected revenue for the year and the coming year. And I know without a doubt I can make it because remember, your budget is realistic. It's what you're going to make, what's going to cover all the bills. Your goals are what you set that push yourself and stress yourself. And your goals should not match your budget. So if your goal is to sell 5 things a week, if your budget says you need to sell 5 things a week, your goal is to sell 10 a week because you want your goal to scare you a little bit, to push you, to force you, to really stretch you to work as hard as you possibly can. And that's where you make that extra profit. But your budget is lean and conservative because that's going to guarantee you have a healthy business. So if you can, look at your previous years of data so that you can kind of get an idea of how much you're actually going to sell this coming year. Look at your competitors, again, your chambers, your technology centers, your SBDCs, your SBAs. They're going to have that information for you. And then really think and be honest of what you can produce in that year or in a week versus what you can't. And if 48 weeks in a year sounds like too much, scale back to 40. As long as your budget shows that 10 to 15% profit that we're projecting and you can cover all your bills, then scale back even more because that's less stress for you. So when you put it all together, this is what your data is going to look for. And what I do is I do an average. So I look at all my years and I average them. Then I look at that average and I think, is this realistic? Is this what I really want it to be? Or do I feel like I should raise it a little bit? And I'll raise it if I think I should, or I'll drop it if I think I should drop it. But that gives me a really good database to really create a hypothesis or an educated guess versus just this is what I'm going to put out. And then if you're going for a loan or anything and the bank asks you how you got these numbers, you can show them the data behind these numbers. And that's going to mean that you have a very good sense of your business and what you're capable of. And it's going to guarantee or ensure that you have a better chance for that loan, right? Because they're going to know that you understand the workings of the budget. Okay. Did I skip? Okay. So when you put your budget together, you want to see projected revenue. Now, this example is from when I taught a class for young entrepreneurs, middle school age. So it's a very simple budget, but I think this gives us a good idea. So you have your projected revenue, your cost of goods sold, your expenses, and what your total budget is. Then you have your total projected revenue and you have a 10% projected profit for the year. That's really good. This is a very good, lean, conservative budget. Now, again, your projected revenue is $250. That's your budget. Your goal should be 300, right? Because you want to push yourself, but that's going to give you an idea of what it should look like. So when you put it all together, your projected income, this is what it should look like. Now, I like to see it compared over the years because you can see the growth of the business. You can see any fluctuations. Plus, it's going to give you all that data in one place. And you can copy and paste this into your new workbook and add to it every year. But this is also going to be a very powerful piece of information to show to the banks because it's going to show the control that you've had over your business and how you've successfully grown it over the years. Remember to put notes in it as well, though, because we don't want to force ourselves to remember every single detail. That would be just a little bit too much. All right, so then we want to know what our monthly overhead is. So a lot of people call this cash flow. Now you can do cash flow in two different ways. You can do monthly cash flow or weekly cash flow. For me, it's easier to focus on a week at a time. I do better with smaller pieces of time and information than larger. Your actual monthly financial data should be done by the 15th of the following month. This is just a working piece that's going to let you know if you're on the right track or not. So let's say that so we know that your weekly anticipated revenue should be, let's get to the right year, should be about $5,400. Now I always round up because whole numbers are easier, right? So if you bring in $5,400 every week, you're golden. So what that means is you can just keep a running total of what your sales are for the week in your head to know if you're hitting that 5,400 or if you're not. Now, if you're not coming close to that 5,400, this is when you can maybe give some people time off and you cover those shifts. That will save money. Maybe you anticipated the slower time, so you have saved money to cover that, or there's another area of expenses that you can cut. But just knowing on a weekly basis, okay, if I bring in 5,400, I total my sales every day, this is where I'm at, that's going to let you know what you can do and what you can't do, what the health of your business is. Maybe an easy way to reduce your expenses is to not offer all the services or not offer all of the items that you usually sell. That's not always a bad thing. Scarcity on the market can increase the demand for your products and services. This also might mean you need to try a new marketing tactic, or you might need to do a loyalty program or a referral program or any number of things. Or if you hit that 5,400 every week plus some, it means you're right on the money and you need to keep doing what you're doing and looking for new innovative ways to engage your target audience. But by knowing what that number should be, your total revenue, and even what your total weekly expenses are, that's going to give you very powerful information that's going to allow you to pivot and adapt within a week or a month without waiting for that finalized data, right? Because if you wait till the 15th of the following month to pivot and adapt, that could be too late. Where if you know on Thursday you have Friday and Saturday to make sales and you're down $3,000 and there's no way you're going to make that $3,000 in those 2 days, it's going to allow you to pivot and adapt and come up with a new marketing plan, offering a sale, or again, maybe giving some people some time off and you covering those shifts. But that's going to allow you to pivot and adapt very quickly to keep your business very healthy. Now remember, what your Excel notebook is going to, or workbook, excuse me, is going to show is going to be all the data, but your data can't always tell the story. So you want to make sure that you have both qualitative and quantitative data in there. And you want to make sure that you keep as many notes as possible. Now, these Excel workbooks are for you. They're working documents. More than likely, the bank is never going to see them. However, if the bank saw them and they were very neat, and then there was a column of notes that had explanations of what was going on, they're going to be very impressed by that level of organization and keeping everything together versus thinking, oh, wow, she's crazy. She has notes in here. You want to know what was going on in your business 5 years ago without having to remember it. And there's actually quite a bit of data out there that proves and shows that if you write things down so you don't have to remember them, that actually creates more brain space and allows you to think better and do better as a business owner. So write it down so you don't have to remember it. So when we do projections, remember again, we do projections on sales by 3%, by expenses by 5%. So what I always do is I always put a note column in here so that I can update or write down what's going on so that you know if landscaping is going up all of a sudden by $150,000. Oh, that was because we won that government contract, right? That also lets you know that when you're doing projections for the following year, for 2023, you're probably going to want to not use the 2022 data. You're going to want to use 2021 data. So you would get 2021 data times 3%, take that number times 3%, and that's going to give you your 2023 numbers, right? And that's why you have those notes written down, because if it's a one-time contract deal, that's great. That's awesome. Take it, but you can't use those numbers to project because those aren't true numbers. You're also, again, remember the number with story. That's because of that government contract. Make sure that you write these things down. You don't want to be trying to remember. Trust me, you don't want to be trying to remember. You want to have all these notes down. And that's also going to give you a place to go back and say, okay, was that contract worth it? Was it not worth it? Because here's the deal, not every contract is worth it and not every client is worth it. And you want to have that data written down somewhere and all in one place. Again, why we put the cost of the raw materials in here is because we have it all in one place. And because we all have smartphones, right? We can access that data anywhere. So again, if you're meeting with a new vendor or you're meeting with your current vendor, you have the data to give you that power to negotiate for lower prices, which is what we want to do. Again, if you don't benefit or don't budget for overtime, you don't get to give your employees overtime. Now, if you suspect that there is going to be overtime and you budget for it, but then you don't use any of that overtime, that is 100% okay. And that is not illegal. So remember that it's okay if you come in under on your expenses. You want that. The bank will be impressed by that. But remember, again, our budget is very lean and conservative. If it's not written into the budget, we don't get it. Simple. And that's how it is. And this is how you're going to do your projections for your payroll. And then when you put it all together, you can see your actuals and then a projection and a projection. And that's going to allow you to understand what's going on. And it's going to allow you to compare these numbers. You can also see that obviously it's going to go up the truck gas because you're also buying a truck and truck maintenance is going to go up. So you want to understand what's going on there with all of your fluctuations and your numbers. When you put it together, your projections, this is what it's going to look like for the next 3 years. So you have your current year and then your next 3 years. And again, you want a 10 to 15% profit. If you can get higher than that, that's even better. Remember to keep this budget as lean and conservative as possible. Question every expense. If you can cut an expense, go for it. All right, so that class took us about 30 minutes. That's probably because we didn't have any questions. I hope you enjoyed that class very much. If you have any comments or concerns, drop them in the comment section. I would love to hear from you guys. We are going to do a class a month, and I look forward to seeing you on our next class.